Looking back at 2023, there was an issue about inflation, about how we could get it under control, what caused it. And Team Transitory, led perhaps by Paul Krugman, said it really was a supply chain thing, it would go away. You were more concerned about exactly the demand side and what the Fed needed to do. Looking back on it, which was right, what was wrong?
I think there's some of both. Look, to start with, we basically got an outcome that was closer to Team Transitory's prediction. Inflation came down with policy that is what their opponents were insisting on. Interest rates far beyond what they were recommending, far beyond what the Fed was predicting as of almost any date in the recent past. So the record's a bit ambiguous. Yes, absolutely, there have been important supply elements. I have always stressed that we never were an 8% or a 7% inflation country, that because of bottlenecks, a variety of prices went up, adding to inflation, and they would then come down, subtracting from inflation. I'm not sure we're really a 2% target inflation country in any durable sense. I look, for example, at the 5.2% wage increase the federal government just gave, at strike activity that's more than it's been in a decade, at still tight labor markets, at potential geopolitical risks in commodity markets, at the fact that house prices have really started to turn back up. And I'm far from sure where we're going to go on inflation. So to declare that proverbial soft landing to have taken place seems to me to be premature. So I think we're still in an ambiguous situation. I've been saying, David, on your show for close to a year now that there are three possibilities: that the economy turns down quickly, that the economy achieves the proverbial soft landing, and that in a sense we don't ever achieve a secure landing, and inflation never really gets down to target and even reaccelerates. And obviously we didn't see the hard landing in 2023. I was never as sure as many people were that that would come, because as you also know, I've been arguing that neutral interest rates have gone up, so policy is not as contractionary as many people expect, and that the impact of interest rates are lower than many people have expected. So I'm not terribly surprised that we haven't seen a recession in 2023. And I think there are risks, looking at some of the credit figures for the next while. We may achieve that soft landing. I'd certainly say it looks better and more likely than it did 6 or 8 months ago. I always said that soft landings were the triumph of hope over experience, but occasionally hope may triumph over experience. And I think there's still a risk that the market is probably underestimating that we're not going to quite make as much progress on inflation.
So, Larry, we look at these questions not only because they're interesting historically, but to give us some direction for the future, where we should be headed. And so as you look at the risks as you describe them, what about the symmetry of them? Because some people are concerned that we have a bigger risk of a recession if we keep tight policy than we do of inflation running away. Where do you put the balance of the risk between recession by overly restrictive policy as opposed to letting inflation get ahead of us?
I think they're both very real risks. I'm a little surprised by the view that puts primary emphasis on the recession risk, given what's happened to financial conditions in the last 2 months. The stock market's taken off again. House prices are now rising at a 6 or 7% annual rate. Long-term interest rates and with them mortgage rates have come down substantially. I think that in a way we've already seen a substantial easing of financial conditions. And so I think we'd better be a bit careful with respect to the inflation prospect, and that continues to be a source of concern for me.
And finally, Larry, 2023 was a year of geopolitical strife. We started it with the war in Ukraine continuing. We added then the attack of Hamas on Israel and the difficulties that's raised in the Middle East for so many people. We have continued tension with China. As you look at the macroeconomics of 2024, how do geopolitics fit in?
The post-Cold War holiday from history is over. The world is once again a very dangerous place with the prospect of war between major powers. The way in which the United States has conceived itself in terms of national security is no longer viable. We are going to have to invest substantially more in all aspects of national security. That ranges from increased defense spending well above current projections to thinking about national security issues as we think about our educational system, as we did after Sputnik, to thinking about our investment in connections all over the world.